have this lending side, right? Because they are a BNPL. And so Stripe is going to people and the CRO is going to people and he's saying, listen, like we serve all of these merchants already. We have this unified offering of stablecoin issuance through Bridge. We have the kind of global connectivity on the orchestration side. We have the bank account connectivity. We do we have Stripe. Stripe is going to people. These virtual accounts. And the CRO is going to people. And he's saying, listen, the ability to offer. We serve all of these embedded wallets through Privy. We can give you. And I literally was talking to somebody yesterday where I think Bridge was competing against BVNK for a deal, and Bridge came. And the CRO is going to people. And he's saying, listen, the ability. Stripe will give you some amount of free verification hits. Essentially, there's the Stripe verification product. We'll give it to you for free for some amount of BVNK limit, right? And obviously, like BVNK doesn't offer even a verification product, right? That is not something that they do. Neither does Bridge, but Stripe does it, right? And so they're winning these deals by saying, hey, listen, we can offer you this full stack solution, including like this verification product from Stripe, and we will give you some of it for free, and we'll make it economically worthwhile for us in the total, but maybe, certain parts we'll be able to win against these other providers, right? And that's happening, right? We're seeing that right now. What we also know is that Tempo is essentially like lending out their engineers like in an FDE model, the same way that Palantir is, and going directly to these companies and saying like, we'll build all of these integrations for you. We'll for us, we'll do the total, but maybe certain parts, right? We'll be able to. So that's incredibly enticing. Like, why, if you're and that's happening, and you already trust Stripe, you already have a deep relationship with them, and then all of this other stuff is happening, why wouldn't you want to use them? Now, this market is going to be humongous. There is a lot of people who are going to want to operate in this way. And a lot of people in the traditional fintech side are not going to want to push or, Tempo or Stripe because they're also under pressure and competition, right? So I was talking to a card network who specifically told me like, yeah, we have a deep relationship here, but we actively are going to try to push other chains than Tempo because we believe that this is, hurts our relationship with them, right? This is going to continue to be a topic of conversation, but listen, Stripe is, in the totality of what they're doing, is the behemoth in the room in every one of these conversations. They are trying to win every single deal with this, kind of total operation. A lot of people who are not, even the sophisticated people, do not want to have to take, 4 or 5 or 6 vendors to, recreate the same thing. And so all the startups, we're heavily invested in probably every part of the stack that that Bridge or Stripe would compete against. All of them are thinking through, what is our reaction supposed to be to how deeply Stripe has leaned into the space. But listen, it's a big market. Like if you look at, ISVs, you look at PSPs, like they're not, it's not winner take all. There's multiple, multi 10, 15, 20, 30, $40 billion businesses that are built around these in different markets. And so I expect that'll be the case here, but it is the, sort of the behemoth that everybody's looking at right now.
Yeah. Yeah.
Can I just say something? Klarna. Price of sales, 3, 5 times, 3 times, 4 times, 5 times, depends. It's not profitable now. And then you have like Ethereum at 200 times price of sales, Solana, 80 times price of sales. How do you think about that? Like you could also look at like Aave, for instance. It's going into kind of this segment. I was looking at like, okay, Klarna has 100+ million active users in their platform. The entirety of crypto has 40 million active users. Who's in a better position to monetize? Who's in a better position to expand LTV and actually monetize that captive user base? Again, like, would you rather own Klarna or would you rather own Aave? Would you rather own Klarna or would you rather own Solana or Monad?
What do you think?
Klarna.
Yeah, I mean, there's a real question here around like, Santi always the fundamental value investor in the room, and I'm not saying Klarna is a bad buy. I haven't spent that much time looking at it, but it is down 30% since its IPO 2 months ago. That said, like, the question that the market is asking itself is who is going to grow more, right? Like that has always been the question. The market always prices growth better than they price EPA or cash flow for anything that is tech related. And obviously, a stablecoin product for Klarna is a tech conversation. And how much that he's been talking about AI replacing a lot of their costs, and for them be able to operate much more efficiently than a traditional bank. Like, they are trying to sell a tech story, not a bank story.
Yeah, you go look at Affirm, a bit more expensive. You go to get PayPal, kind of in a tough spot. Candidly, it's a stock that I constantly track. For what it's worth, like, a lot of people saying, "Oh, you must have sold your entire crypto book, and now you're gonna like." I'm like, I'm really not. I'm excessively long, irresponsibly long crypto. But it is just like a common question, right? Like, as an investor, Monad for 4.5 billion. And then you also look at, like, I get your point around, like, investors just like valuing growth at all costs and willing to overlook that. Revolut, what is it? Ramp is raising out, I think, like a 60 billion or something, or was it 30 billion, 40 billion? 40
I think
billion.
They just raised it 32.
32 billion. Yeah. Stripe's at 100. Ramp, clearly, like, so maybe like expanding that universe. Would you rather own some like Ramp, Aave, or Stripe?
Ramp's a great business. Like, I mean, and also Ramp has raised 3 times this year, right? Like, they're on a rocket ship at the moment.
Yeah, and you best.
So yes, would I rather own Ramp at any time this year than anything in crypto? Probably. Maybe not Bitcoin.
Then why are you still investing in crypto?
Because Ramp is like a one of N company, right? Like, there is like, and to be fair, right? So I'm in crypto, I'm in Bitcoin, I'm in a bunch of alts, right? I still believe in the growth story broadly of what's happening. We've talked about this a bunch, right? And I think there was a Smack from Compound VC put out a tweet yesterday, maybe, that talked a little bit about how we're now in this time of crypto where actually we're getting a lot of what we wanted. We're getting stablecoin adoption. We're getting tokenization. We're getting, real market participants wanting to participate in a way that is not just as a proof of concept, but is actually moving businesses on rails, right? But that doesn't necessarily accrue value to, the rest of the ecosystem. And there's now real dispersion around the winners and the losers, right? And so what he said in his post, which I do agree with, and Santi, you and I talked about this a little bit last week, is that the core crypto VC or the core crypto investor, the core crypto trader, can no longer just be a core crypto trader, investor, participant, right? You have to understand what's happening more broadly in the market. You have to understand what's happening in fintech. You have to understand what's happening in financial services. You have to understand the macroeconomic market. And you probably have to be, we went through this period of time where all of the generalist investors were awful crypto investors because they didn't understand the technology. And now it's flipping on its head, where the crypto investors need to be better generalists. They need to understand how AI is changing the world. They need to understand what is happening in fintech. And if you're not an investor that has that ability, then you're going to miss out. But that doesn't mean there's not opportunities in crypto. It just means that you have to be broader. You have to have a big purview, and you have to be able to make decisions like, should I buy Ramp or more Solana? Well, I'm allocated to both, but like, what should I be doing this time? Because I would definitely rather own, there's a couple of our portfolio companies that are growing faster than Ramp today that I would definitely rather own than any token that we're talking about, or that I would rather own than Bitcoin at the moment. But it is more of a holistic decision-making process today than ever.
Yeah. I mean, last thing, because again, I look at a business like PayPal, it's trading at 13 times PE, not growing as much. Analysts kind of have been very, very observant around the challenges that business has faced. They have PYUSD, they haven't pushed it as much. 13 times PE, the broader market is trading at 30 times. And you could argue a lot of that is just driven by the Max 7. But at some point, you mean to revert. And I am thinking constantly about that because we're in a later, like, as much as people are so hyped up on this stuff, I just for the sake of me can't, like, my business historically has been investing in early stage stuff. And I think in crypto, you've been incredibly successful. If you picked any infrastructure bet sub 100 million, you would have made money, like almost blindly. And like, that's okay. Like, if you're like, I just sort of came to terms with that it's like, I'm enjoying myself after Parify. I want to cycle the world and just chill for a bit. And I say, okay, if you bring me an infra deal and you're a smart team and a lead investor like Dragonfly has done the work on the docs to make sure that I don't get absolutely rocked, I'll put money if it's below 100 million. Like systematically just kind of did that. I'm not like, I'm sitting there and I'm seeing Monad that I participated in the $600 million deal. It's trading at 4.5, 5. Okay, interesting. Will it be able to sustain that valuation? I just don't know. Because maybe to your point, like Tempo comes along and it's valued at what, 5 billion? And Stripe's going to use their entire muscle and it's limited, right? To your point, it's not credibly neutral, but they're doing the Palantir FDE model to win over Klarna. Like, again, like valuation, I'm saying you're raising it, you know, as you think about like investing here, like why wouldn't you again just knock on the door of the founders of Ramp and say, hey, gents, we're Dragonfly. We're a crypto native firm. I think we can really help you here. I think there's a part of your business that probably benefits. Allow us to invest in this $32 billion round and just compound the fuck out of that position.
Listen, I would just say one thing to this, which is that like we do everything right at Dragonfly, right? So we're, we led the seed round and the seed extension into Monad years ago, right? And I'm very bullish Monad, by the way. Like we can talk a little bit about Monad, but it's been live for 2 days. It's been performing incredibly well. I think TVL is now up over $200 million. It's traded down to right at the 2.5 mark, and now has continued to grind up. Launching in this market, I think, is actually a blessing in disguise, if I'm being honest, for them. And listen, I personally do not believe that innovation at the block space level is done. And yes, some of it will be owned by the corporates, but most of the corporates are just doing other stuff out of the box, right? And so like I'm very bullish on what they're doing. And I think there is still a world in which that type of innovation needs a very crypto native, tech first understanding of what is happening. Like I do not believe that a traditional investor could come in and truly understand the intricacies of DeFi to back the next novel product that gets made in DeFi. And I don't think we're done building novel products in DeFi, right? So I'm still bullish about what is happening in this market, right? That said, as you know, we're in these businesses like Rain, Yano mentioned earlier. They started out like basically like a Ramp competitor, and now they're much more broad in terms of infrastructure for card issuance and issuer processing, and also merchant acquiring, all running on blockchain rails though. And like Rain is probably one of the single fastest growing companies in the world right now. They don't publicly talk about their numbers, but we see them and it's incredible, right? And that is a company that required, I think, some crypto native understanding, and it required foresight to look at what is coming in the stablecoin space. But it also required a deep understanding of how traditional payments work. And that is where I think the market is going, is that you need to be able to cross the chasm and do both. That doesn't mean that there aren't opportunities anymore in the very crypto native side. It just means that you have to have a holistic perspective today. And I talk about this with the LPs. The reason I think Dragonfly is so well situated is because we have this ability to do both, because of my background and Haseeb's background and Tom's background are so differentiated among the three of us, and that we do so many different things. And I think the VC funds that are not able to look at the whole broad set of opportunities through that lens are going to really struggle going forward, right? To your point about Ramp specifically, 32 billion is kind of out of my mandate with my LPs. But could I have done it at $1 billion? I probably would have.
Santi, you're I get what you're getting at, and you're ragging on this stuff a little bit, but just the counter would be you did Monad at 600, it's trading at 4.5, you're up 7x on it. Why not just keep doing that?
So I did Monad at 600, it's trading at 4.5 billion. I'm up like 6x on it. Why keep doing it?
No, why not keep doing it? Like you're ragging on the system, but you did just make 7.5x on Monad in a year and a half.
On paper.
Yeah. On paper.
So like we'll see what the unlocks like pretty. And by the way, I'm not going to continue to do it. One, I just see more value in who's going to capture the benefit of this technology? My thesis has shifted. As I re-underwrite my thesis, I fundamentally think that deployers are going to capture more value. Companies that can cut costs, that can enhance a customer relationship. A lot of, so since I left Parify, I think I invested in over 250 on paper. There's closer to 200 companies. I've seen some, most of them that have gone under are for the single reason that, there's not enough users on chain and no one cared about the products that they built. And I am seeing an interesting dynamic of like this technology be, it's open source and it can be forked, and everyone talks about network effects. And I just think first mover advantages and network effects are overstated. I don't think we can support the valuation of most of these networks at where they are, and they're valued on this crazy TV like terminal value growth number of everyone coming on. And I have so like I am definitely re-underwriting my thesis. Now, will I do the occasional infra deal? Look, I'm not disagreeing with Rob around. I do think there's incremental marginal improvements that we will continue to be made in the infra layer. We're never going to know until we onboard 100, like we triple 10x the user base. So like I'm building an avalanche. Right. Dude, am I going to be in a tough spot if I onboard 100 million users through an acquisition? But we're never going to know until we do it. And I think it's normal. And it's a normal way. I just think like if you overlay the sequential waves of investment, like we've overinvested in infrastructure to the tune of 100 billion. And I think you now need to see less investment in infrastructure, more in the deployment of it. And I think it's one of those things where, as I've seen more and more corporates get into the mix and their decisions of how to deploy and which providers and how competitive those RFPs are, I do worry that if you're underwriting something around network effects and value capture and the moats of TVL and Lindy, like, it forces the question around, is the value capture going to be there? Like Ethereum, there's no version of this world where that asset is worth 400 billion. I don't own it. I haven't owned it since basically when I moved to a tax-friendly jurisdiction. And could Monad be the next Solana at like 100 billion? Because that's probably what, you're thinking there and saying, could you displace Solana? Could it do a better thing? You would have to believe that Solana is accurately valued at 75 billion, which I would argue, no. So no, I'm not doing that. I'm no longer investing as much through my family office because A, I don't have any time, and B, I'd rather deploy. I'll probably be the largest LP in my fund, in the private equity fund, because I just see more value in buying a business and reaping the benefits of this technology. That's a better risk-adjusted strategy for me.
What I love about this pod is that I get to come on and hear Santi and one of my founders be like, "Yeah, I'm not investing anymore. I'm only working on the startup." The startup.
I don't think, Rob. Like, what is? I mean, I don't know. Like, there was a time where like I saw like really good teams. I think now I just haven't seen. I've seen some projects in Monad. I've seen some projects like the 100th million like prediction market. Like, I haven't been wowed. And maybe it's because founders just haven't reached out that much, but we talk about like what's the quality of the founder coming in to the space. Electric Capital does a developer report, which I think is no longer going to be made. I think they changed the format. But Rob, from your standpoint, I get your strategy. Is the quality of the founder getting better or worse? Are you seeing super high quality deals right now?
It depends on the part of the market that you're in. Yeah, I mean, it really depends on the part of the market. Listen, we've talked about this a bunch, and I don't want to belabor the market points. I want to move off this soon, but what was true in 21 was that the incremental smart kid at Stanford was working in crypto, right? What is true today is the incremental smart kid at Stanford is working in AI. Like, that is a fact, right? Now, I do believe, like, earlier today I did a reference call on a founder on a seed deal that we're looking at, and these founders have really traditional. One of them comes from a big Fortune 500 and ran the digitization aspect of a Fortune 500 that you've heard of before, household name, and it's coming into crypto because they want to build something new on stablecoin rails, right? And we are starting to see, I think, in those parts of the markets in certain verticals, that there are really good founders, We're seeing really good founders on the market infrastructure side. We're seeing really good founders on the stablecoin side. That is increasing. But you're right. Is the incremental like deep tech research engineer like coming into crypto today? Like it's less likely that it's happening. And so, we've been, and I think I said this to you before, Santi, we've been quite slow this year in terms of investing, but that I think is the right thing to be doing at a time when the market seemed overly euphoric, right? Like we try to be countercyclical. And my guess is like going into next year, now that you are so bearish, I will probably start putting more money into the market. That is probably the way that's going to work.
All right, I'm going to take a swing.
Can I just say one? Let me tell you something. I will. There's always going to be a place in my book, in my heart, to back founders that are willing to do interesting things. Monad at 600 was above my initial valuation. I would have loved to have catch it at sub 100. I don't want it to come across as like totally discounting. Like people as a founder, it's a grind. I mean, I just know those guys are grinding. It's a stacked team. They're trying to do something against like kind of all odds when the market's telling them we don't need another infra. There's infra fatigue. So I'm super grateful of that. I'm not trying to be dismissive. I'm just sometimes I think there's a world where you can objectively talk about prices without it demeriting the hard work and effort of founders that can't control where the stock goes or the price of the coin goes. That's market driven. So like, I just want to make that clear, because a lot of times when people hear me be critical of prices, they're like, dude, you're an asshole. Cause what about the hard work of these teams? It's like, no, like, I'm just like, it's totally different things. You can be very critical about the stock of Solana. That doesn't mean that I'm bearish the infrastructure. That doesn't mean I hate Tolly and all the incredible builders in the space. It's just an intellectual discussion about it. And it will serve us well as an industry to be open-minded about having these discussions, as opposed to being like, you're an idiot, your math is wrong. I'm like, okay, Ethereum's going to $1 trillion. Fine, dude. Like, okay, good. Cheers.
This episode is brought to you by Zashi Wallet, your gateway to buying, storing, and spending in crypto. With gains and deletes to get them. And let me there's other news I want to cover. So let me take us away from market talk. You guys mentioned prediction markets a little bit. Santi, you mentioned Kalshi and Polymarket race to the bottom with fees. There was actually a very interesting Robinhood prediction market news this week. So I'm going to read the headline and then we can talk about the maybe second order implications of this. Robinhood extends its prediction markets offering through new JV with Susquehanna to operate CFTC licensed exchange and clearinghouse. So what does that mean? So Robinhood is partnering with SIG, who's one of the biggest market makers in the world, to purchase a clearinghouse and launch their own vertically I'm going to read prediction market. So a little bit of context on this, right? So the Robinhood's a broker. They're the front end. They own the customers. They get the deposits. They have the distribution. The clearinghouse is the back end. They handle margin and risk and settlement and kind of the rails, right? This would be like a CBOE or CME. And Robin, Santi, correct me if I get some of this stuff wrong, but I think I'll get the basic definitions right. So you've got the what Robinhood did when they wanted to get into prediction markets was they partnered with Kalshi. I think I haven't looked at the numbers in the last couple of weeks, but at one point about a month ago, over 50% of Kalshi's volume was coming from Robinhood. And
it's over 60%.
It's over 60% now. Okay. So what Robinhood is doing with this announcement, my understanding is they're bringing all that flow back in house. So Robinhood said, look, we want to get into the prediction market space. Let's be really quick to market. Let's partner with one of the existing prediction markets. They partnered with Kalshi. They did something like a 50-50 revenue share, and boom, worked for both parties. What this announcement is showing, though, is that whoever owns the distribution remains king. So Robinhood is, I don't know if they're officially ripping out Kalshi, but they're definitely bringing more and more of the stuff in-house and building their own DCM, the DCO, and the customer relationship instead of paying someone else, aka Kalshi, to do that. Obviously this is one of the big battles this year is Polymarket versus Kalshi. Polymarket has tried to take more and more of the users for themselves. I would say Kalshi is trying to do the kind of white label or embedded model a little bit more, it feels like. And this would probably be an argument for owning the customer relationship instead of selling your services. So I'd love to hear your guys' take on just, I don't know, this development, what you think.
Prediction markets is all out war right now. You can see it on Twitter and how much money people are spending on astroturfing and marketing and the partnerships. to your point, like, it's also become clear that everybody's like Kalshi has actually been giving rebates essentially or paying people for their flow. I think Webull publicly announced that Kalshi was giving at least 50% of the revenue back to Webull to work with them. I'm sure there was a similar story with Robinhood. And then all of a sudden, Robinhood says, okay, well, listen, prediction markets is the fastest growing part of our business now. Like sports, I mean, it's sports specifically, but sports event contracts, clearing on Kalshi is the fastest growing part of our business. Why would we give up 50% of that revenue or more to another provider? By the way, another provider who is definitely much more of a startup than we are. And we have a history of, they already run their own clearing broker, right? They already have their own separate entities to be able to do a lot of this infrastructure with Susquehanna. I mean, I think they use more Citadel and a couple others, not Susquehanna on the equity side, but Susquehanna is the largest sports market maker in the world. They're behind basically all of the sports markets. And so like, why wouldn't they do that? Why wouldn't they increase the margin by 50% and be able to replace the infrastructure provider? And so, I mean, DraftKings is working on something as well. They announced it. They acquired a prediction. Really funnily, they tweeted out about how prediction markets were a fraud. 3 weeks later, acquired a prediction market company, and then announced like 2 weeks later that they're launching their own. FanDuel is working on their own. Like there's a bunch of others. This is going to be an all-out dogfight, and you have to have some level of distribution because it's not that hard for these guys to stand up that business because it is just it's a financial market, right? There's not some sort of like real huge regulatory moat when these DCOs and DCMs are already owned by these companies or when they are able to acquire them for cheap. And building these contracts like Susquehanna and Jump and all of these guys, they're happy to do it for everybody involved. And it's not actually that tough of a business that doesn't have that much lock-in. And so, I tweeted it out that, this is unsurprising. I think it was surprising to me how quickly Robinhood decided to displace Kalshi. And by the way, I'll just preface something here. We don't know for certain that Kalshi is not going to get any flow or is completely ripped out. There's been no discussion of Kalshi from Robinhood, and there's been no response from Kalshi or Tarek or anybody in the 24 hours since it came out. And so there could still be something to be worked out here, but I don't know why they would give up any of their economics. And it reminds me that you have to have either some reason that you have really, really good lock-in, which is a regulatory mode, it's a coverage mode, it's a technical mode, or, and people almost always overrepresent what their lock-in is, or you have to own that some distribution yourself, and you have to have a brand yourself, right? And this is, the Polymarket Kalshi debate, that we've been having for a long time. That is the place where Polymarket has really leaned in and won in a way that Kalshi has not, which is that when you hear people talk about prediction markets, they talk about the Polymarket, right? They don't talk about, whatever. So.
Rob, would you rather own DraftKings at 15 billion? I think that's current enterprise value, or Polymarket equity at 15 billion?
Polymarket equity at 15 billion as a current shareholder of Polymarket equity. I have a lot of Polymarket equity. Listen, I actually don't know. I haven't studied DraftKings business that closely. I'm actually, and I'm going to take a step back because I said that somewhat facetiously, right? But I actually want to make it very clear. I would actually rather own Polymarket's business. And the reason I will say this, right? And you're going to come at me and you're going to try to tell me some multiples some sort of like.
No, I mean, let's not forget, I have a very strong economic interest.
That's right.
I've invested in the seed, and Verify being a huge owner of Polymarket is an objective discussion.
Yeah, but let's not forget what has happened here, right? DraftKings and FanDuel have the businesses they have today because they spent years building a legal and regulatory moat with the state gambling commissions, right? They entered and they went state by state. They lobbied, they helped draft legislation, and they got approved in the states that they're in. And what happened is Kalshi came in and brought with Robinhood, and Polymarket's coming in. And they all of a sudden said, hey, this is a CFTC nationally regulated derivative that allows you exposure to the same market that DraftKings spent years trying to build up that moat in. And all of a sudden just started taking a ton of market share, right? So for DraftKings, what happened is they had a specific vertical that they were dominating that they had built a regulatory moat around, and that got crushed overnight by just the form factor of how people were getting that exposure, right? Now, there's a long way to go in the legal fights around this. I think that Nevada just came out with a pretty bad, not a ruling, but a pretty bad conversation and some early indications around how they might view a sports-related event contract relative to the Sports Gaming Commission and whether or not it should be locally regulated versus CFTC regulated. But all of that said, DraftKings is still a vertical business focused on people getting exposure to sports. That is not Polymarket's business. Polymarket's business is about 35% of their markets are sports. Their business is about tokenizing the markets for literally everything. Like I talked to an insurance company last week that wants to sell insurance and hedge on Polymarket, right? Like they want to be the oracle for truth and data for every single thing that you can put money on, right? Yeah. And so that is a much bigger addressable market in my mind than sports gambling in the US, which is what really Kalshi was focused on and has been focused on to date, and what and DraftKings is focused on.
There's a great episode, Jeff from Susquehanna, one of the founders. He talks about their investors in Polymarket and talks about the insurance use case, some other use cases around like pricing risk continuously. And obviously he cut his teeth being a poker player and thinking constantly about probabilities, and like just overlays his lens to what Polymarket has unlocked in prediction markets. And so it's just interesting. You should go listen to that. It's a very neat. He doesn't typically do podcasts and interviews, and I just found it to be someone that was like familiar with prediction markets. His perspective was like pretty awesome to hear.
There's another topic. Anything else on prediction markets? I want to get into.
Didn't Polymarket get officially approved in the US?
Oh yeah, they got CFTC approval, right?
Yeah, you may mention that, but I just want to make a note of it.
Yeah, so it's just another check mark for their re-entrance into the US.
What does that allow them to do, Rob? It allows you to trade Polymarket through brokerages. Polymarket.
Yeah, they can be the infrastructure provider and they can also be the broker, and you can clear elsewhere as well.
So you'll finally be able to use Polymarket in the US.
Yeah. So Polymarket in the US is coming. So very, very clearly.
Yeah. When does their app go mainstream, or when does the app get off like beta? Do you know?
I mean, they haven't said anything publicly, so not my place to say anything. Right. But they're definitely working towards that in haste. So
yeah, let's.
Okay, can we just 1 minute, Rob? Polymarket is deployed on Polygon. There's been rumors about the token. Do you think that they will it stay in Polygon? Does it build its own chain? Ties into the whole infrastructure lock-in that we've talked about, or do they go elsewhere?
Listen, they're going to do what works for them, right? And at the moment, Polygon seems to be working incredibly well for them, and there's so much low-hanging fruit for them to continue to expand upon. And so they have this focus on the US app, and they're continuing to expand the types of markets and the core infrastructure, right? And so in my mind, they raised over $1 billion. They clearly have the resources to go and to kind of do whatever they want at the moment. But if Polygon is working, and for them, then that's not going to be the main focus. What will they do over time? I can't tell you, right?
So I saw Ivan, ex-Dragonfly, Matter Labs, join Polymarket. I talked to him during his journey about leaving Matter Labs and whatnot. So found that quite interesting given his background. Was zero knowledge proofs and stuff like that. And seems like they're beefing up their engineering teams, all I'm observing from the outside in.
Yeah, they're beefing up their engineering team both on the blockchain side and on the call it the core traditional engineering side as well. Ivan joined and he seems very happy there. So
this episode of Empire is brought to you by VanEck On-Chain Economy ETF Node. If you feel like you're covering real sellers, bonds, and survey on protocol handle addresses, in this API and block. Let's talk equity perps, guys. So Hyperliquid launched stock perps via HIP3, which basically lets you add contracts for traditional equities assets. So NVIDIA and Google, Tesla, they've got an index called XYZ100. And I think the interesting thing that I want to talk about with you guys is they just there was hold on, I had the data pulled up. HIP just pulled in 537 million in daily volume, with Nasdaq leading, followed by Nvidia and Google. This was a tweet from Crypto McKenna. The markets are scaling much faster than I previously anticipated. So I just Rob, I saw you guys back something. I think it was a project. I think it was called Trade XYZ on maybe Mega ETH. I think
Hello Trade.
Hello Trade. Thank you. Yeah. Trade XYZ created XYZ 100.
Trade XYZ is the brand that's on top of that you're talking about right now through Unit that's on HLP3. So.
Yeah. So I would just love to hear your guys' thoughts on these. On-chain equities. Basically, it seems like this is the early days of a big narrative. Feels like something where a lot of people are like, yeah, but how big could this really get? Eventually, I think it gets very, very big. And I'd love to just hear what you guys think about this.
This is interesting because we've obviously had equity perps earlier this year. Like Ostium launched them. A few other people launched them. And some of the exchanges have launched them as well. And they haven't done particularly well or a ton of volume. But Trade XYZ has been incredibly successful so far, right, in a very short period of time. I think maybe this is wrong, but I was looking at data earlier today that said the 24-hour volume on Trade XYZ was about 990 in the last 24 hours, which would make it like 12.5% of all of Hyperliquid volume, which is actually incredible that it scaled that quickly. The infrastructure is still a little bit interesting to me because they have this. The way they think about the Oracle is that they do. There's been a lot of the debate with Ostium and versus Unit about how you think about the Oracle here. But the way they do their Oracle is they do like kind of like an internal order book reference price during non-market hours. So they're still open during non-market hours, but they limit how far away or how much the price can move relative to the max leverage relative to its closing price when the market when the reference market closed, right? And so to say that very clearly, and that probably wasn't that clear, if a stock closes at after hours trading at 8 p.m. on a Friday at $100, and you can get 10x leverage on that stock, then they don't allow it the reference price to be more than 90 to 110 over the weekend.
So 10%.
Right? Yeah, 10% because of the 10x leverage. It would be different if it was different leverage amounts, right?
Yeah.
And so what it tells you is that, they're still also very worried about the risk during these non-market hours. That is obviously the big unlock or the big concern that people have been focused on, because the markets and the market makers haven't wanted to carry that amount of risk especially over the weekends, right? And so they're saying, okay, well, we'll let you bet on it, but not, big moves, which, if you look at the way Bitcoin has moved on some of these like Trump tweets during tariffs on a Sunday, like it still creates a lot of risk for the thing to just a gap, on a Sunday, right? And so I'm interested to see how it performs over that period of time, because Ostium was closing markets at market hours. They've decided, and the guys at Hello Trade, who we backed, who are not live yet, they've been debating exactly how they want their market to work, and they're kind of coming around to keeping it open, but doing something similar to Trade XYZ. But there's a lot of I see an opportunity or a lot of surface area for attack around those off hours, and I'll be interested to see how they perform during that time.
Yeah.
But congratulations to them so far. It's been incredibly quick growth.
On this point, Rob, so it reminds me a lot of like after hour trading. Like historically, it probably is a problem that markets had to resolve, and it probably goes to, do you have a robust set of like market makers to create a market here after hours? And if that's the case, then wouldn't it be economically solved? Like someone like Wintermute or Jump or someone can just make more money during these after hour when the market's closed event? Or how do you, how much of it is like technological or how much of it is market structure? And if it is like,
so I think there was maybe it was Tolly or somebody said that that perps are the I forget exactly what he said, but I can paraphrase into like perps are basically the single hardest smart contracts to write, which most people will tell you that that is probably true. That the single hardest application to build right now is perpetuals on chain, and the attack vectors are very large economically. It's less like technical; it's like economically understanding how this works, right? And the market makers, as you know, Santi, as well as anybody, they're delta neutral, right? So like they're not here like they're trying. They need to hedge their risk somewhere else, right? And so on a Saturday, if you are exposed to large swings of a perpetual of NVIDIA, how do you hedge that? Like, what do you do? Like overnight, Monday through Friday, you can probably do some sort of dirty hedging with the sun, right? Like you can hedge in different markets as like, Asia opens and Europe opens and, et cetera, right? So you don't have direct exposure, but you have the correlated exposure. But I don't know how you do that on a Saturday, right? And so the weekends have always been the behemoth that everybody's been focused on. And you have to make sure you have the right amount of margin and collateral requirements. But I mean, we've seen what's happened in Hyperliquid with Jelly Jelly, and you and I talked about, I forget which token it was, but a similar type of economic attack a week or two ago that happened where they closed the bridge because they were able to change the Oracle price very quickly, which caused a liquidation, which caused a loss on the vault, right? And the same things can happen to the market makers when things gap because with all this leverage, right? And so that's the concern for the market makers over this period of time where it's hard for them to stay delta neutral.
Yeah. Historically, just the last point of observation on this, I remember when DeepSeek, I think, came out over the weekend, and like, how do you hedge that, right? It obviously has implications around NVIDIA and some of these other players, and Bitcoin just took a hit. Historically, Bitcoin has absorbed that kind of a dirty proxy to your point around hedging, especially over the weekend. Some like macro or geopolitical stuff, like people just go to Bitcoin and like short it or go long. We'll see how that continues to behave, but yeah, pretty interesting developments.
I have another topic here, which is actually a small acquisition, but it's Coinbase acquired a company called Vector, which is built by the Tensor folks. And I think the acquisition is less interesting than what happens to a token during an acquisition. And there's both the before and the after. So before the acquisition came out, a couple days before, the token started running up. Token was up a couple 100%. And then after the acquisition, actually I haven't looked, but I can assume what happened. Let's see. Yeah, token has gone down. So here, I can pull up the chart here, so you guys can see it as well. So this is the chart of Tensor token, and I think basically there's a couple conversations here. There's a conversation about this token running up from like 5 cents to 30 cents in the days leading up to an acquisition. There's also a conversation about, as acquisitions, it's kind of M&A season in crypto. They acquired the tech and the team, but what happens to the token? And does this token just go to zero over time? Should Coinbase buy out the token? Just, I don't know. It's kind of newfound territory. So I'd love to hear your guys' thoughts on this deal.
I think Santi should go. This is like the conversation here is like an anti-token conversation. Right? So this feels like
I thought we're getting into the precedent of you going first always, but look, there's a couple of things to unpack. One, there's clear insider buying there, and I think that the Coinbase team addressed it quickly, and they're looking at Into it. I've known the Tensor guy.
Who? Yeah, I think one of the issues with the Tencent acquisition, I actually think like the equity holders, Tencent Labs, probably made money, but the token holders kind of lost. And it's not the first time it's happened in crypto. I mean, I don't know why they're kind of like making it sound like it's the first time it's happened, but it's not the first time. I think Uniswap and the fee switch issue for token holders has always been that case. It's no different to that, I think. Um, yeah, just like in Uniswap, like the people, the investors who hold Uniswap Labs equity probably would um, have um, I mean, they have like business forms uh, to them, and they use token holders. So I think the same thing's happening with Tensor, like those who invest in Tensor Labs, like the company, um, they probably won on the acquisition. They made money. I believe Santi is one of them as well. But the token holders, like Tensor token holders, um, who don't own equity, yeah, they lost. So it's a great example of kind of like fucking your community. But it's not something new. Really. Yeah, that's my 2 cents on it.
For a bit. They built Tensor, which is a pretty good NFT marketplace in Solana. Then the Vector stuff. I don't know, honestly, is the simple answer. It has happened to a one portfolio company of mine, smaller scale, like Subsquid, I believe, went through this as well. And like they'd say the same things, which is the foundation will continue to operate. But yeah, look at that. Let's just double click on that, because to me that's sort of the most important thing. Like, ladies and gentlemen, no matter what you're doing, whether it's if you want to assume that these things are not securities and think that you're going to get away with this. Clearly not. So there was Omar. Shout out to Omar from.
I think this is the thought. So just to walk listeners through it, if you're not watching on YouTube, it said, so Coinbase announcement, Coinbase is only acquiring Vector. The Tensor Foundation will remain independent from Coinbase and will steward the Tensor NFT marketplace and native token. Oh, see, that's interesting. So so Tensor,
didn't buy Tensor.
was originally one of the big competitors of Magic Eden. I didn't realize that they're not buying the NFT marketplace. They're only acquiring Vector. Okay. So then Duda says,
I mean, the story here, I think, really is, listen, the Tensor token, and Tensor was originally started for the NFT marketplace, right? Like Magic Eden and Tensor, I think, were the largest NFT marketplaces on Solana.
Yeah.
They, as you know, NFTs went away, they launched Vector. Vector was essentially a meme coin DEX or trading platform. And the Tensor token, because it was the same team, the Tensor token had exposure to the economics through potential buy and burn, et cetera, of both Vector and of Tensor itself, right? And so Coinbase comes on and they say, hey, listen, we want to buy a trading platform on Solana to sell to our users that's retail focused, because we are doing a lot more through the, call it non-custodial app. And we think this will be interesting. Like a bunch of these, non-custodial trading platforms like FOMO, et cetera, have raised money recently. And Axiom is one of the biggest, for a time, was one of the biggest businesses in crypto. It was the fastest growing business in YC last year, right? And Coinbase acquires them. The team goes over, presumably, and I have no information here, but presumably they get really big deals from Coinbase that make them relatively rich. They get a little bit of money up front, right? And they get the tech. And the Tensor token holders get nothing. The Tensor, DAO, whoever the Tensor DAO is, gets to continue to operate Tensor, right? And Coinbase, at a period of time when Coinbase has been pushing, quote unquote, the tokenization of everything, right? Or this. So all of a sudden, what we've seen people all acted rationally, right? Which was that Coinbase only wanted the trading platform. They wanted the team. The team is getting richer. They're able to go and have better distribution in their Coinbase. And everybody on the token side.
That's the key point. That's the key point. Everyone acted rationally. There's no crime. There's no bad actors here. Everyone acted how they should have acted, but there's clearly a loser, which is the holders.
There's misaligned incentives with the token holders.
So
and that is the question.
Can we, what are token rights? Like what is a token? What type of rights does a token confer to the holder? Again, I don't think there was a misrepresentation of that because we've danced around a regulatory environment.
I'm not saying there's a misrepresentation.
No,
I'm saying there's a misincentive and a misalignment, which is bearish for other tokens, right? And so this is the question, Santi, like in your point you can make it.
The interesting thing will be, I was not an investor in Tensor. I think at one point the Tensor token traded at like 1.5 billion. Now it's
do you remember your trade that you almost put on?
Oh yeah, go to crush, like go long Tensorians. Nonetheless, profitable trading strategy. So I would want to, the only thing we haven't touched on is if you were an equity investor in Tensor, which I believe raised money at the, when FTX collapsed, it was a bunch of angels that kind of gave him money. I think Dudas might have invested there. There's a lot of like die-hard Solana guys. What happens to that equity? Because historically, you do an equity investment, then they launch, then that maps out to some token supply that the team and the investors get. The Tensor token will continue to exist because the NFT still generates fees. And so if you had an NFT, well, that's different. But if you had the Tensor token, there's still that protocol continues to operate, right? Now the real question here is who exactly on the team? And I think that's where I think the Tensor team said, hey, they're going into Coinbase, but there's like a staffed up foundation that will continue to kind of operate the Tensor marketplace. So the only thing that I haven't heard is if you invested in Tensor equity, what was the waterfall there?
Yeah, I mean, it's a good question. In my experience in these things, like they work out something where like the equity holders basically get nothing, right? And I don't know if the Tensor deals were SAFs or if it was like, equity plus warrants, right? In a world where it's equity plus warrants, right? Theoretically, you own preferred equity if you're an investor, and then you sit on top of the waterfall, and then you also get the token warrant. You're still on mute, Santi.
Oh, and related entities. So like you would own, like if you as a founder and raise preferred equity from a sophisticated investor, if you start building other stuff, like the equity holder has a claim on that. Unless it's like
theoretically, I don't know how the infrastructure works.
If you had an investor put that into the,
and
it should have been invested. It should have been that way. And to be fair, they did. And I'd have to go back and look at what the exact language was, but they did make it clear that the Tensor token had economic exposure to Vector too, right? And so if you expected the token would have economic exposure, then you also expected the equity would have economic exposure, right? Like it was probably structured that way. And so again, like it's not about misrepresentation. It's about like, what are we doing here? What do we do going forward to make it so that tokens aren't just, we're not just having a debate about, okay, well, what are their multiples? But in these types of situations, there's actual alignment from token holders and the economic outcomes. And if there's not, then are they just whatever loyalty points? And if they're just loyalty points, how do we value that? Because it's not valued on a price to sales multiple, right? And so like there's maybe we're not going to come to the answer on this podcast, but there is an existential question that is raised about our industry and about how much of it is structured and about where we are, and in part because of Gary Gensler and what the SEC did to tokens and where we do going forward, right? So there is a question being raised here, and maybe it's just, hey, like a new version of this SEC and CFTC help us solve this if we get a Clarity Act or they go and do rulemaking, and we can align more economic incentives and ownership. But it brings forth a question that we should all be thinking about, both as investors and as builders in this space, about what we do going forward. If we can sell a business that a token supposedly has economic, exposure to, without giving those people any money.
Yeah, it's a good case study along with Uniswap of how to structure, legislation and policy going forward. Because, it doesn't seem fair for a token holder. But again, a SAFT, I hate to say it, but a SAFT is a receipt of sending someone money. Nothing else, nothing more. Simply, thank you for your money. So you invested in all the ICOs. It was just that. And obviously that doesn't protect perhaps an unsuspecting investor that would have sat there and said, oh, I'm actually getting ownership into the work product of all these cryptographers and Superstack team.
Anything else from the week?
Happy Thanksgiving.
Should
we talk about Bearchain? Should we talk about the Bearchain thing?
Last thing about Bearchain, yeah. Should we? I'm happy to go, Yano, if you don't want to give the. One of your reporters, Jack, but I read through it. Obviously,
No, Jack is great. I'm happy that he, I'm happy that he had what people didn't see is Jack had worked his ass off on this story, and it was really we shut down the news team, which we've already covered at length on Empire, but Jack had put a ton of work into the story, so I'm happy that he was able to get it out. But yeah, Santi, if you want to give context.
Basically, the TLDR is Bearchain raised around where Brevin Howard, an affiliate of Brevin Howard called Nova Digital, I believe, participated in the round to the tune of 25 million. Weinberg participated in the round as well, and a couple other folks. And there was a clause in there that only applied to Brevin Howard affiliate that allowed them to get allowed them to get a reimbursement. Where if Bear didn't trade above a certain level, I believe it was $3 after TGE, I think a year or two after TGE, they had this a year after TGE, they had this ability to request their money back. And so there's a couple, I think that characterizes it well. Rob or Yano, I don't know if there's anything else that you guys want to go into, but that's sort of the TLDR. Where the controversy lies is that it seems like other investors were not made aware of this. So, and didn't have this kind of side letter, particularly framework. And I think that might trigger like most favored nation to sort of basically this clause that if you're a lead investor, you typically don't allow the team to give a preferential treatment to someone else. In this case, it appears that Nova, like this Brevan Howard affiliate, got more preferential terms than Framework. So that, of course, is something that Framework will have to figure out. And the second piece was how they marketed the deal, which is just as a like an equity raise, but with that term, of course, it just is very different, right? It's kind of like a free option, so to speak, of Barra trading really well after TGE, and if it doesn't, like basically Brevan Howard just doesn't put any risk really, other than the fact that assuming that they're not going to burn through all that money. There's a lot of controversy on the timeline. There was some folks that said, hey, this is like not real. I think I haven't read fully the response from the Barra team, but I don't know, Rob or Yano, if you guys did. I skimmed through some of the responses. Gabe Shapiro, a couple other folks.
As an investor in Barra, does this make you are you frustrated reading this, or you don't really care?
No, of course I care. I haven't reached out to the team, but I will to get their thoughts on it. There was an official response from Barra, so we could probably pull that up. I think it was Captain Jack Sparrow or Smokey that put a response.
Smokey read a response, yeah.
Smokey read a response. So I don't want to mischaracterize it, but I will say as an investor, it is definitely something that I pay attention to and want to talk with the team about. Because even though I didn't participate in that round,
yeah,
it just it's
yeah. I mean, so Smokey put out a response that was essentially like, listen, the framing of the story was inaccurate, and the whole reason that Brevan did it was because of the need for protecting themselves against, whether or not there was no TGE. And, they've continued to hold the token, and they, haven't exercised this right. And in fact, they've been, market making and doing, like liquid type of TVL deals, et cetera, on chain. And, they also denied that any other investor had an MFN, where Jack is saying that other investors told them they have MFNs. I don't know if this is true or not. I'd be shocked if Framework didn't have an MFN. You would never co-lead I would never co-lead a deal not have an MFN. That would be insane, right? And so, I think there are a lot of questions here, and maybe the broader point here is around just the opacity of which these deals continue to get done. And even when the tokens are launched, there is no, way to have any disclosure around them, right? Because if all of the investors, like if this was an SEC disclosure requirement, you would have to put out there that a current large shareholder has the ability to get a refund at some price directly from the company. Like the SEC would require that deal.
But that's not necessary. That's
even
only
on the private markets.
Yeah, the private market.
But remember, this refund right exists 12 months after TGE.
Right. So you're basically saying it's a public market because retail investors can have access to the token.
Correct. Because this affects the public market investors who have exposure to Barra.
You have a thing that's usually never private. Like if Blockworks raised a round, we had a side letter, MFN, or whatever the rights that we give people, we don't have to share any of that. Just like all private rounds, like Santi with Inversion. Like if you guys had some special letter with Dragonfly, like that you don't have to share that.
We definitely have an MFN with Inversion. And
as
so
you should,
as
all leads should. But you don't have no one has to know that.
We could say it more nicely, man. We definitely haven't. No, like I haven't heard a response from Framework, but yeah, it poses an interesting idea of like, again, on rulemaking, if you know you're going to have TGE, and the docs reference TGE, then like you have to think about like, again, this is where like you can't fit old regulatory framework into these rounds that eventually will map out to a token. Like even at TGE, maybe the thing is, you and I have talked about like Blockworks and the opportunity here, but like creating like a Edgar SEC where like when TGE happens, these things need to be disclosed. By the way, I've seen some exchanges like Binance require give me basically every piece of documentation of all the rounds, all the major holders, their wallets. It's a colonoscopy. I would want to, if you're an exchange that listed Bera, you probably saw this document. Especially if you're if you're Binance, they probably saw this document. Question is, why is it surfacing now?
Well, I will tell you, maybe this is a good point. The Monad sale on Coinbase, one of the best parts of that Launchpad sale that they had was that they did so much disclosure around it. And I expect that if Coinbase knew about a deal like this and they put this on the Launchpad, they would have disclosed it as well. And that is what we need. We need more disclosure. Now, maybe that wouldn't have changed anything. I mean, Barrow's been down only since it listed. It's like $500 million market cap now, or FTV now, and it would launch at $3 billion. But I think this is, for me, very much a disclosure point. But because I don't care.
Yeah,
if the investor doesn't do his diligence and he loses money because of it, as a private investor or venture capitalist, that's going to happen. Like, that's on me, right? If this was me and this deal, that's on me, right?
Yeah. It would have, look, if it is, so just to round out the point here, the response from the Bear team was refuting it, or there are some elements of truth here, but not all of it. It's kind of mischaracterized.
They refuted a little bit of it. They basically refused to respond to any of Jack's direct questions. It didn't, from my vantage point, it did not look particularly nice or good from what they said.
I'll reach out to the team. I would want to talk. It's one of those things where if it were true, you would have just wanted to disclose it then and there. At least your other co-lead framework, and then to other investors. But yeah, I will be reaching out to Smokey.
Let's get into content of the week. Go ahead, Rob. What kind of
I was just gonna say, I really like this extra long Thanksgiving week episode. So people, when they're home and they're trying to deal with their families, they're just listen to us for
go on a walk,
hour and a half.
I love the long Thanksgiving walk where you're I can't take the fam anymore. I'm going on a long walk.
Listening to the roundup.
Yeah, listen to the roundup. All right, I got one. Mike Green. Mike Green, who's I don't actually know what he does. He's like a fund manager / macro guy / Bitcoin I don't know. I just feel he's does the podcast circuit. He's spoken at our events for years, actually, been on our podcast. But anyways, great person, Mike Green. He wrote this Substack called Part 1, My Life is a Lie, How a Broken Benchmark Quietly Broke America. And he talks about, I'll share it in the Empire Telegram channel so people can read it there. But basically the main takeaway is we thought that you needed, 30 or 35K a year for minimum wage in America. Really, that number should be more like 140,000. It's a good read. I'm gonna botch it I won't do it justice if I try to summarize it, but I'll drop a note I'll drop the link in the Empire Telegram channel. It's a good read. It's related to Santi, what we were talking about 3 or 4 weeks ago about America and is the dream still alive? And so anyways, good read.
I'm going to cheat because I also had that in my bookmarks. I saw a bunch of people that I really respect retweet it and comment on it. I guess to add a more an additional piece of content, it was Pranav that forwarded me Peter Thiel's lecture, which I've seen before, but it was just such a good one that I listen to it constantly, which is Competition is for Losers. Funny enough, it's Sam Altman that gives the introduction at Stanford.
It's not his lecture on the Antichrist.
I haven't seen that one. But it's just kind of, if you read 0 to 1, great book. It's just a seminal
it's a
lecture, and it's 40 minutes, an hour. So again, if you're starving for content while you're overstuffed on turkey and whatnot, it's a great one. We'll link it in the show notes for real.
Guys, this is the week everybody's with their family. Okay, they need something lighthearted, and
my life is a lie. Why middle class does not exist?
And you guys are out here just getting really heavy.
Give it to us, Rob.
Dude, you're gonna give us a horror. You're gonna give us a horror movie. So
what kind of Thanksgiving scary movie do you have? Yeah.
No, not this week. This week is rivalry week in college football. It is the best weekend of college football every year.
Okay. Go blue, baby.
Ohio State, you gotta put the hat on. Put the hat on.
Is that the
Ohio
Buckeyes?
State Buckeyes, the best rivalry in sports against Michigan. Gonna blow them out. Watch it noon on Saturday.
What's that? What?
The
Repeat.
Yeah. Buckeyes are 11-0, 78% on the line. Rob,
That market.
it's just the whale. Interesting. All right. So Buckeyes wins it, I guess.
Go Bucks. Noon on Saturday. Watch it.
go